Now, as we turn our focus to commodities, is Ebrahim Patel. He's a commodities specialist at RNB, and he's also just declared that he doesn't impersonate the Minister of Economic Development, even when he does get the chance to do so.
Well, I think what you should try and do, Ebrahim, is phone and put on a certain tone of voice, and who knows what appointments you might get.
Now, I mean, it's amazing what advice you can get on the morning shows as well. So I'll keep that in mind.
We should interview him as if he were the minister.
Yeah,
what would you do?
Let's see what your policies are for economic development. But let's get into commodities. To start off with a commodity that's top of mind for South Africa anyway right now, and that's platinum. And sort of the expectations, should the next 48 hours yield what everybody's been waiting for in terms of a breakthrough in the strike, what sort of impact is that likely to have on the market?
I think we first need to understand the strike in terms of its consequences so far. So you've had mining production go to a 47-year low. You've had mines lose around 21 billion rand in revenue, and you've had workers lose around 9 billion rand in wages. And especially on the worker side, that's money that would have been spent on goods and services in the economy. So the strike has been devastating. There's a massive knock-on effect. So I think everyone's looking to see what the effect will be, what will the outcome be. And there are some positives in the pipeline, one being the more direct intervention by the state in terms of the Minister of Mineral Resources coming in and directly negotiating. Also, there seems to be talk of a compromise deal with higher wages for the lowest paid workers. So there definitely is an expectation that perhaps there's now a deal on the table that could satisfy both sides. And I think the markets will react positively. Generally
this morning
for South Africa.
It seemed that AMCU was sticking to its original demand. Clearly they're trying to find a way to let it get out of that demand, but it doesn't want to.
Correct. I think the problem is when you've had a very, very public and vocal demand that you've really pinned yourself to, and that's become your rallying call. To then settle for something else may not be the easiest thing. So I think there's probably also a lot of ways on how they can actually stick to the demand or get to where they want to go, while allowing the mines the flexibility that they need to accommodate what will be an increase in costs, and perhaps an unforeseen increase in costs as well.
Well, moving on from platinum, let's look at gold and perhaps start off with some of the global pressures that are impacting on the price of gold right now.
Gold has been range-bound currently. I think there's a few things impacting gold. So firstly, we've seen it slip 3.3% in May, which was the largest monthly drop so far this year. And you've had the S&P 500 reach record levels yesterday. And so that's obviously going to attract more money into equities. That was on the back of better than expected US service industry job growth. So people are expecting the economy to grow. Obviously, Fed tapering will continue, and people are now looking more towards equities and gold. And also the European Central Bank, their rate decision, will there be stimulus or not? So I think gold is in a wait and see, and you can see that in two key indicators. Gold volatility is at its lowest level in 14 months, and gold's been trading in about an $11 range this week, down from $51 the previous week. So I think investors are adopting a wait and see to see, are there any clear signs for being in gold, or is this now the time to switch asset classes and maybe get into equities?
Let's get back to the platinum price. It's been pretty static, hasn't responded, or it has responded but it hasn't moved to the platinum strike. Let's say we get that agreement. There's a pipeline. It'd take a while for the mines to get going again. So part of what you do is to tell people who want to know what's going to happen to this price given the strike ending, and how long is it going to take for that price to move?
I think the strike ending would be seen as bullish for the industry. But then obviously it means that there won't be a deficit because production is going to start. So you may well see the price falling on what is positive news, because it then means supply can start rolling in, there won't be a deficit. The thing with platinum is there are above ground stocks. A large proportion of the platinum going into catalytic converters comes from recycling. So you wouldn't have seen an immediate price spike because of the strike. And now it's just a matter of how soon do they come online. If it takes a lot longer than expected to come online, and people now start to dip into inventories and inventories start to run out, you could see a spike. But if it all dovetails nicely such that as the stocks run out, new production can come online, then you'll see the price probably moving with fundamentals as opposed to being influenced by the decision of the strike.